Hello, everybody. Welcome to Monday Morning Must Knows. My name is Merlin Rothfeld, and last week we saw Jerome Powell and the Federal Reserve make some highly anticipated moves, raising 75 basis points on our Fed funds rate. But what was interesting was, at the press conference shortly after, Jerome Powell started off with some rather dovish comments, citing good news about the economy and some stats that were looking fairly decent, and then all of a sudden did an abrupt about-face and really became very hawkish, meaning Fed's going to be more aggressive. Their stance was very aggressive going forward, and that spooked the markets. We saw some pretty significant downside moves in a lot of individual equities and those broad market indexes. But that's just central bankers and the Federal Reserve. This week could be something far more impactful and much, much more major, and that is midterm elections. That's right, ending Tuesday night, you do have the elections wrapping up. Now, for those of you who have not voted yet, I would encourage you to please go out there and vote. Doesn't matter what your political affiliation is, you have a right in this country to vote. Do not squander it. Go out there and vote for the political party or individual that you feel will do the best at making this country the best that it could possibly be. Now, I have already voted, but make sure that you go out there by Tuesday night at 8 o'clock. Now, which way is it going to go? I have no idea. Bottom line is we could see a significant shift in political power. 435 seats of the House of Representatives are up for grabs, and 35 senator seats are up for grabs, which means we could see a shift one way or another with regards to political power in this country, and that can significantly shape our policy, a lot of laws, a lot of regulations going forward, which can have significant impact on our financial markets. At this point, we don't know exactly which way it's going to go, but make sure you go out there and vote. And then we'll see later on, maybe in some of our future episodes of Monday Morning Must Knows, what the impacts of these elections might be. Now, let's move one step further and get to something that I can tell you that's going to happen, and I know when it's going to happen, and that is earnings. Last week, we had 1,600 earnings. This week, we have even more. We have 1,687 companies reporting this week, and there are a few big names in there. We'll start things off on Monday. You have Mosaic, Take-Two Interactive, TripAdvisor, Cronus, and Activision Blizzard. Tuesday brings you Disney, Wynn, Occidental Petroleum, Akamai. Wednesday, you have Canopy Growth, The Trade Desk, and D.R. Horton. Thursday, you wind things up with ACB, which is Aurora Cannabis, NEO, one of those darling electric vehicle companies, and AstraZeneca. And on Friday, I just put the Globe in here because there are a ton of international announcements. It's not like there's a whole bunch of U.S. stuff. There's maybe 2 or 3 small U.S. companies, and the preponderance of them on Friday are big companies like Bayer, etc., but internationally, and they don't really give a reporting time, which means they could bump their time around. So I decided just to leave it as an international calendar. So quite a few big names out there. Make sure you check your earnings calendar just so you don't get caught off guard with some earnings announcement in your portfolio that really starts to hurt you. Now, the final thing we're going to talk about for this week. If you followed the press conference that Jerome Powell gave shortly after the FOMC announcement on Wednesday, he really talked a lot about inflation and inflation going forward and how the Fed was going to be more aggressive in order to bring inflation down. He'd rather be more aggressive now than have to be playing catch up later on. Some would argue he's already playing catch up now. Bottom line is he was focusing intently on inflation. Now, they were using core PCE numbers, also PCE numbers, but there's also CPI and PPI numbers. And this week, lo and behold, guess what we have coming out? We have a CPI number. And as you can see on this chart, it's starting to slope down on the hard right edge of that chart. It's slowly curling down. It's gone from 8.3 down to 8.2, as you can see here highlighted by this red box. That's the previous meeting. Now, on Thursday at 8:30 a.m. Eastern Standard Time, we will get the next release of the Consumer Price Index. And at this moment, expectations are that it's going to continue to drop, although ever so slightly, which means we're seeing a month-over-month decline of about 1/10 of a percentage point with regards to inflation. Now, the number you see here that says 8.2, that is the annualized year-over-year inflation number. If we get an 8.1 at the upcoming meeting, that of course means we're slowly drifting down. And a lot of people are wondering if the measures that the Fed has put in place, this intense rate increase, also the removal of U.S. dollars from money supply by unwinding their balance sheet, is having a dramatic impact. And as the months go on, we'll start to see how those rate increases and removal of money are really impacting these markets. It takes some time. There's a significant lag effect when you raise interest rates to see how that's actually hitting the economy. Now, there's many people out there that feel the Fed has raised too quickly. Others feel not fast enough. Bottom line is this: no one will ever be completely happy with what the Fed does. What we do know is that their actions will have an impact on our markets going forward. And as traders, it's our jobs to discern what that information is going to be, how it's going to impact the markets, and build a trading plan accordingly. Now, hopefully this week you have a lot of opportunities with the elections, with a lot of earnings, even some of the fundamental and economic data that's rolling out to plan your trades accordingly and hopefully profit from these market swings. That, my friends, is your Monday Morning Must-Knows. We'll see you next week.